you might have to acknowledge it. All right. Hey guys, and gals. I'm on here with one of my favorite lenders. I got Mike.Corning from Mortgage Solutions. We're going to sit here real quick and pop some things out here on VA because I've had a lot of VA questions, and with the changes that have come about, it's kind of important to find out things you might not have known you could do that you can do, and that's even better because it really benefits you. And in in this current market with the buyer frustration and stuff like that, there's still things that can be done. And even on the owner's side, if you're not selling but refining, there's things that really in the higher dollar areas of King, Thurston, or King, Snohomish, and all that you didn't know you could do before, which you couldn't, but you can now.
Yeah.
So hey Mike, welcome aboard.
Hey, thanks so much. And Leon, thank you for having this meeting with me and also giving me some easy questions. Maybe it's easy for me because I do a lot of VA loans, but thanks for setting me up for some success to look like I know what I'm talking about.
Yeah, no worries.
Yeah, and then the picture in the background, is that how we're getting lumber into the country to save some cost?
Kind of wish. It's probably where all the lumber went, but now that like I said, me being military retired, I always give love back to my military. That's C-17 loading a tank in the back of it. So there's those that have seen it. I think that one there, I was actually in Iraq in the good old Balad. So when I say that name, people have been deployed. They know what Balad and where it's at. So okay. Interesting spot.
Yeah, I just see that lumber and I know how valuable it is right now.
Oh yeah. It's much cheaper back then when I was loading it. So I'm gonna jump into this for you. Sure. Basically, they've had some changes to VA loans, and I'm not going to start with 2021. I'm going to go back to 2020 because that's when a lot of things happened that really benefited people. And I'm amazed how many VA buyers or homeowners with VA don't understand it. So could you hit like what the loan limits did and the funny fee thing so people understand that?
Yeah, definitely. The VA used to base their loan limits based on the county loan limits. So that would be King, Pierce, and Snohomish carry theirs, which is usually higher. And then all the other counties in Washington would have the lower, which right now it's like 776 for King, Pierce, Snohomish. Every place else is about 550, 548 and some change. So in January 2020, the VA said no more loan limits. So as long as it's your only VA loan, which yes, you can have two of them at the same time, but if it's just your only one, then it doesn't matter. The VA is going to guarantee the whole thing, which is cool. And something that you had kind of sparked my mind on and makes me want to go reach out to any veterans I can think of that bought their house a few years ago, and especially in a county that had a lower limit, is if you bought at a price 3 or 4 years ago and your house has gone up in value, now you can refinance that and cover the whole loan with the new loan limit. And that includes taking cash out. Otherwise, if you weren't going to take cash out, you would just still fall under the same old limit. But that's pretty awesome. And anything else that you wanted to say around that? Because I know you had some good insight about that.
Well, and the famous words, I got a lot of people that I used to fly with in reserves. They work for the Lazy Bee. So basically, if you're in King County, if you're in Snohomish, and at the time the loan limits are like 464,000, you wind up going conventional or whatever. And in cases like now where you had to buy a house, all this overbidding, you might have had 20% down when you started out. You wound up having to put 10% down because you had to come up with extra money to buy a house. You can now take your VA, which some people think you only use once. You can take your VA, come into this thing, refi to your VA. You lose your private mortgage insurance. This means you lose a couple $100 a month off this thing. Absolutely. And you still get a really good rate. So the question would be, I always say this, it's your benefit, you earned it. You need to use the thing.
Yeah, you can use it over and over again. And something that I've done with people who are buying more than one house is use it on a second house, so it's cool. If you bought it with a VA loan and just want to keep that house as a rental, you don't even have to refinance it. You can just use the rest of your VA loan entitlement on another house.
Yeah, because I've explained to people, you can have more than one house at a time. You don't have to sell a house, get your VA back. You just have to qualify, correct?
Yeah, exactly. And you can use the rental income projected as long as you have a signed lease on the old house. So yeah, there's lots of cool, creative, resourceful ways to get there.
Okay, and then you said the funding fee changed. How did they change that?
Yeah, it went up. If you're a first-time VA user, it went up to 2.3. I think it used to be 1.6. So, and that's added in the loan. You don't have to pay that out of pocket, but that definitely makes your payment a little bit higher. But the rates have gone down since then too. So it's probably a wash, but that higher funding fee is going to stick.
Okay, and not to put you on the spot,
Yeah.
funding fees for people that have disabilities, what is a disability limit they need in order to have the funding fee waived?
Any disability, any percentage. So as long as you have any VA disability, you do not have a funding fee. And then what?
Yeah, see, you hear that, folks?
Yeah,
No, and
exactly.
that's actually a really important thing because one of the things I know is if you're in the middle of doing your loan paperwork and you go ahead and get it done, and let's say you're in the middle of doing your disability stuff, if you're in the middle of doing your disability and it's already on file while you're doing this, once your loan closes, you can go back with that, submit the paperwork, and they will refund you your funding fee.
Yeah, which if we just look at what's 2.3% on a $500,000 house, that's over 10 grand.
Yeah, it's
So
and you know, I'm all about the money. So at that point there, what that means is when that check for 10 grand shows up, pay something off, get that
yeah, for
financial
sure.
freedom. But I always tell people, you know, the government isn't here for you to like make a money or profit off them or whatever that way, invest like that. But the purpose behind VA is invest in yourself, give you a home, whatever. And these are things that all it takes is the time to fill out the paperwork, sit down with someone knowledgeable. And I say this wholeheartedly and honestly, a lot of times I have lenders that go, oh yeah, I can do VA, but because they say that doesn't mean they understand it. And so there's a lot of times I've seen that people have had what I call bad loans because the things that should have been done weren't. And then by the time you refi out of that into something else, this and that, you add up the cost for all this and it's astronomical and it shouldn't be that way.
Yeah.
What's your average loan times right now? And what changes because of coronavirus are you finding to your loan
I
times?
think now we're back to somewhat normal. The appraisal is the longest turn time part of it. So as long as there's nothing funny with your income, meaning you're not self-employed, we'll save time by not having to verify with the IRS that you filed your taxes. If you're self-employed, that could take a little bit longer. So that's kind of something that's slowing it down a little bit if you have anything kind of wacky on your income. But as long as you're pay stub W-2, the only thing that'll slow us down is appraisal, and we just have to order it immediately. So that's the thing that I always do is as soon as you're in contract, we're pushing the button on ordering the appraisal because it's about a 3-week turn time. And so after that comes back, we still need, a week to close and for everything to get reviewed. So to hit that 30-day mark, we have to order the appraisal immediately, but we're still hitting 30 days on VA.
Okay. And what I tell people a lot of times, I get offers. I'm a listing agent as well as a buyer agent. I get people sending me an offer, and we'll close in 2 weeks. And I tell people that's not realistic. You know, let's go ahead and set a time down because the other part in negotiating a deal for me is the seller understanding I'm working at their convenience as well. 2 weeks, they ain't ready to get out of a house unless it's vacant.
Yeah.
So, I never worry about stuff like that.
Yeah.
So we don't have any loan limits, which basically means what you qualify for, you can buy.
Yeah.
I had sat there, I know the VA rehab loan had been there for a while and they stopped the program. When that, if and when that comes back, which I kind of think it'll come back, but who knows? Are you in a position that you'd be able to do those as well?
No, our company has not. There's a chance that someday we could. It's anytime that there's programs available, we have the option to work with them, but I just don't think we've done it in the past. I've done rehab loans on FHA and they're fun, but they're also a lot of work for the buyer. So you have to go out there, get 2 bids from every contractor, depending on what you want to get out, what you want to get done. But as far as I know, the VA does do them. They're not right now, but it is something that's in their product line, something that they can do. And I haven't met any lenders who have actually been able to do it. So, but I will keep my ears open because I know that there's going to be houses that the only way it'll work is with a rehab loan.
Yeah, no, and then that's one of those things. And then one of the things I always touch on, and I was laughing, I had another lender whose company name I won't name, sat there and I had structured a deal where I still got VA debt payment.
Yeah.
And people get this confused with closing costs.
Oh, yeah.
And so, one of the things in a loan, any loan, no matter what type, VA, FHA, conventional, whatever, DTI is the famous word to kill people, debt to income
Yeah,
ratio.
exactly.
And
Yep.
so what I was telling people when you come in, one of the things that VA does that's different than a lot of other places, in addition to closing costs, they allow debt to be paid.
Yeah.
And so what is the limit on that?
Well, there's no real limit. I mean, the appraiser is going to be the one who sets the limit. I mean, VA has a limit of 4%, but that's not including closing costs and that stuff. So I guess 4% seller contribution plus closing costs. The closing costs are another 3% or so. And we can also add in buying down the rate to that on top of that 4%. So yeah, I think 4% would be the amount to use to pay off debt.
Yeah, a good reference. And like I said, and so
Yeah.
what that means for folks, I have actually had cars paid off.
Yeah.
I've had credit cards, I've had other things. So one of the, it's such a, I hate to say rare, but it is rare that other places don't allow this. The VA does allow this to happen. So when you turn around and have debt come to the table, if it's structured right and they're willing to do it, you can get that paid off, which gets your debt to income down. It lets you buy more house and less monthly output out of pocket. So it's a very good thing. But that, once again, that's something that a lot of agents and a lot of lenders are surprised don't understand or don't go after when it's offered or available.
Yeah, I know I'll talk a little bit more about this on a question down the line, but there was a client that I had that had a judgment. So a negative hit on their credit. Judgment was from a couple years ago. It needed to be paid off in order for them to close. We got the seller concessions and paid it off at closing. So not just a debt, but a really negative judgment, that was filed with the county. So we were even able to pay that off at closing using the seller contributions. And then that story was also really weird because they were engaged. So the veteran, the borrower, he was engaged. We needed her income to qualify. So they got married during that process and we were able to use her income. And so that was sweet because usually what VA cares more about residual income. So what's left over at the end of the month, more than what your DTI is. They do have a DTI limit, but it's way higher than FHA or conventional. They care about what's left over at the end of the month. That's going to make or break the deal. They want you to have cash left over after paying all your bills, including maintenance and utilities and all kinds of stuff like that. So if the more people in the household, the more they require you to have. And so, yeah, we just needed her income to make the deal work, and it was crazy. So, I mean, that's very uncommon. It's the only time this ever happened. And his score was below 500. So VA has no minimum credit score.
See, and that's two things I'm gonna hit that I'm hoping people heard. The credit score thing isn't as important, and the other thing is, when people sit there and worry about their debt to income, you need to understand. I mean, the average loan, they say, 41 or 46% or this or up to that. Understand that I've seen stuff as high as 60% plus.
Yeah,
So it really
65
comes,
is
yeah.
the max that I work on.
Yeah, so this is where it's very good to sit down and get an assessment to see where you're at. Because if you think what's holding you back is just somebody go, oh, well, you're 50% or more, don't listen to them. Find out for yourself, because at that point it's just hearsay and it's not the real deal. So yeah, I like that. VA seller paid concessions on closing costs. We sat there and like I said, definitely different than paying off debt. Can you touch on that for me?
Yeah, definitely. So like we said, VA doesn't have a limit on actual closing costs and buying down the rate. So you can use the seller concessions to do that. The appraisal is going to come into play there, meaning let's say you're asking the seller to pay $20,000 in closing costs. And that means the appraisal is going to have to come in high enough to cover it. So the appraiser is going to look at that. The appraiser will see, hey, they're asking for $20,000. Here's the market value. The appraiser may decide, well, we'll go 10% above asking or 10,000 over asking. We're not going to go 20,000 over asking. So that's going to be up to the appraiser. I think if we keep it at 6% of the price and below, I've seen appraisers say that that's okay, and that's within the tolerance. I think if it goes over 6, then that's a red flag for the appraiser. So that would be, in a $500,000 house, that means you can still ask for 30 grand.
And that's something I tell people all the time. A lot of times appraisers, they get the purchase and sell agreement. They see these things, and when they look at it and see closing costs, they understand, especially in like places like Pierce County, Thurston County, we're so heavy military that on a VA deal, they do show love to the veterans if it's structured and put together right. So that's another thing where I always say the closed mouth don't get fed. So even if it's not me as your agent, tell your agent ask for it. All they can do is tell you no, you can
Yeah,
renegotiate
exactly.
it or whatever, but just it's there as a benefit. It needs to be used. And that's where, like, why we're saying today, even other lenders that just shy away from these things, and they shouldn't, because it's a benefit, it's there, and it needs to be used,
Okay.
and if you don't ask it, it doesn't get there.
Yeah, I think that, oh, I just want to say, Leon, in the current market, everybody knows it's a seller's market. So the seller can be picky. So we gotta, if you need the cash, then make it worth it. For example, if you're asking for 20,000 and their list price is 500, you probably want to offer at least 520 so that they're still getting their five, and maybe even more, because if there's multiple offers, maybe somebody's offering 510 and not asking for closing. So
Right.
maybe offer 530 and ask for 20 back. So it's thinking about that. And then just knowing that if you're in a position where you're strapped for cash, you just might have to meet more houses before you get a yes. And
Okay.
that's okay. I've worked with a ton of clients who didn't really have that much money, and we still found a home. It just took a little bit longer to find one.
And then something I found, I shouldn't say I was laughing about, but something I looked at. So as far as employment verification, it used to be like right before, you sit there a month before they'd verify, never come back. I've noticed it changed. They're pretty much right now, about the time they get ready to pull docs, they're doing employment verification. And,
Oh,
and,
yeah.
I, and I bring this up because you have some people, they're trying to kind of sneak things through there, and you're not trying to do anything to make yourself pull up short.
Right. True. Yeah. Well, especially because of the furloughs, they're really being tricky. The VA and the underwriters are just calling basically the day that they're drawing docs and making sure you still have a job. And then if you're still active duty and you have an expiration date that's in the next 6 months that you're going to get out, they're either not going to approve you, or we're going to need something from your commanding officer saying that you're re-enlisting. So
Right, you're eligible to re-enlist.
yeah, right. Yeah,
So
you would have to make the statement, I'm going to re-enlist, or you just wait until you're out and then apply then, because you're going to need to show income.
right. Now we say you have the right to change your mind. As long as you're eligible to re-enlist, that's all I've ever really seen with people put
That's
in
true.
there. So as far as the current market, as a vet, I tell people it is kind of brutal on the buyer side. It is hard, but things can be done. And it comes down to having a strong package, because what it comes down to in a seller's mind is probability of success. Is this deal going to go through? And I push on my end to show that if Uncle Sam is your co-signer, his big brother is if he ain't got no money, nobody does. Even when he's broke, he's not broke. So
Yeah,
one of those things where even competing against other offers, I just say it comes down to how strong your offer looks. I turn around, it's not uncommon definitely to call the loan officer up and go, okay, where are these folks at on paper? How do they look?
yeah,
And while the Privacy of Information Act does have to be honored, the lender can make or break a deal. So this is why even on a VA, I say I like to have everything done, not, oh, we qualify. I like to get it done, because the further you are in the process, the stronger you'll be on paper. And the seller just wants to know that, well, like I tell them, whether the guy's putting 20% down or nothing down, is who's coming to the table with the money that can close the deal.
yeah, yeah.
So on a VA, I tell them, don't drag your feet. Go get this done. You need your DD-214 or other documentation. You want to start early to get it done, because right now things are slow. And this definitely helps you as a lender put their package together. But overall, it helps the buyer because they can perform.
Yeah, and that's just to drive that point home even harder, is that if you have anything weird, if you get overtime, if you're self-employed, if you have a credit score that's below a 580, then we need to start working on it right now for you to be ready in the next 6 months to a year, just because that it's going to take more time to get you through, maybe get a couple of months of making payments on time in your account and all that kind of thing. Another thing that really matters to the VA is that you have 12 months of on-time payment history. So you got to prove that you've made your rent payment over the last 12 months.
Okay. And then, so the question is, if a person sat there, wanted to buy a house or refi, as far as to make it easier for them, where would you suggest they begin?
Well, I would love to work with you. So you can reach out to me, and we'll basically, I just need to see pay stubs and pull your credit. That's basically it. I mean, there's a couple other docs like W-2s, over the last 2 years, but it's mainly seeing what's on your credit to see what your residual money, your leftover money at the end of the month is, and looking at how much you make. Yeah, I mean, that's basically it. The VA is pretty flexible. They make us do some paperwork, so we got to jump through some hoops, but I know how to fill it out, and I definitely can help. But But yeah, it won't hurt to look that you could be saving a couple $100 a month, especially if you're getting rid of mortgage insurance, if you had to take a loan that had one. And rates are pretty good right now. They're still around that 3 range, you know, a little bit below, a little bit higher. Sometimes we can get it even towards the mid to high 2s if your credit's good and you're willing to pay a little bit for the rate. But yeah, so there's still stuff in the 2s that are available right now, which is cool. It's not, I don't think it's always going to stay like that.
And what I tell people starting out is we have so much access to everything. So your last couple months bank statements, go ahead if you got your tax stuff handy. Don't worry about the DD 214 stuff, because a lot of times it's easier for like Mike or a lender to go ahead and pull it for you.
Yeah.
They do it all the time. They know how to get it quicker to get the results. So what I'll do is in the bottom of this video, you'll see contact information. Feel free to reach out. You can call, text, email, either Mike or myself. We'd love to help you guys, but I hope those of you that watch this sit down and have gotten something out of this, because the whole purpose behind this is to kind of clear up a few misconceptions on some stuff and help people that might be in that sitting on the fence wondering, can I or can't I, or what they could do. And if you own a home and like I said, you wound up having to go conventional or something like that, and you've got private mortgage insurance, you want to drop it, this is a way to turn around and save you several $100s a month. And at that point, the only effort is your time in this.
Yeah, true. Yeah, there's on those kind of refinances, there's no cash due at closing. You know, whether you're taking cash out or you're just lowering your payment, they wrap all the fees into the loan, and you don't have to pay up front for appraisal either. So, and on some refis, you don't even have to have an appraisal.
Cool. All right. Well, I thank you for taking the time with me today, Mike.
Yeah,
I look forward to working with you.
Yeah, me too.
All right. Bye.